Burgess and Bolton's weekly wrap-up.
Hello, Ben. How are you?
I'm good. Happy Friday, Jeremy.
Happy Friday to you. And it's a special Friday, isn't it? Because it's the start, Ben, of Star Trek. No. Let's get that off. Start the coronation weekend. I thought you'd like that. Bit of family thing.
No, yeah, that should be all right. It's another long weekend.
Yeah.
Should be kind of interesting, shouldn't it? I think.
Yeah.
I don't know. Some people are ambivalent about it. I am slightly. I'm more Republican than Royalist. But
I'm going to take a look. I haven't seen one before. Yeah.
No. I mean, of course, I will take a look. Yes, I'm going to. And yeah, but I haven't been invited.
Shame.
Which is disappointing.
It is really
disappointing.
Anyway.
Yeah.
Welcome, everybody, to this week's edition of Burgess and Bolton's weekly wrap-up, where we look at everything to do with the London market, technology, change, innovation. And this week we have the second part of our interview with Jeff Ward, and that's coming up right after the news. So, Ben, actually, I'm going to start, if that's okay. So I found this pretty interesting yesterday. So this is the news that OpenGI's ChatGPT was hurting new customer growth at Chegg. And this impacted the company because their stock price fell nearly 50%, I think, something like that. Or was it 34.8 says on that chart there. It's interesting because
in your world, that would be nearly 50%, wouldn't it?
It would be nearly 50%.
The rounding, yeah. In my world, that's a long way up, 50%. But yes, I take your point.
It's a rounding error. But I think the point is we talk quite a bit about technology, particularly about AI, its potential, and this is quite interesting because over the past month we've talked about it, how it's potentially going to impact industries and work and particular sectors. And this is the first time I think that we've seen a kind of real world shock, I suppose, around its potential to disrupt industries. And so I thought it was quite interesting just to kind of flag that as perhaps, another marker on our evolution to a more AI data-driven world. So yeah, it's quite
it is. I saw that story, and it's clearly a very specific instance where they've recognised that educational materials are certainly kind of the target. And actually, there was somebody talking related to this about how they were working using AI with their PhD students, and actually they were saying they were encouraging their PhD students to use the ChatGPT particularly to enter in things that they'd written or documents to pull out salient points and then to judge those salient points. They were saying we're actually encouraging the interaction with AI as opposed, so it's making the balance and working through ways in which we can best use it to improve. And I thought that was quite interesting because it wasn't just saying it's going to take us over and it's it's like the blob approaching. So I was quite interested in that. And obviously I suspect there will be businesses if this all works, of course. I mean, that's the thing is if this all works, then it will hit the sort of businesses where they literally repurpose data or information in ways that people can then study or use in certain ways. And there's a lot of that, I guess, in the insurance industry and every industry, which can just be done in an automated way, or you can do more with it and more quickly because you don't need whatever that company Chegg has, people plus a bit of IT to create a synopsis of Shakespeare's Macbeth or whatever it might be.
Yeah.
ChatGPT will be able to do that pretty well for very low cost.
And on a similar vein as well, I was listening to a report around students who are in the computer science discipline, and they were using it to check pieces of code. So rather than spending 3-4 hours going through the code trying to find the errors, the algorithm could go through it, could spot the errors for them, suggest changes, and then also give them reasons why, so to help them in future develop better code. So and the student was saying that actually they could then spend that time progressing their learning rather than having to trawl through a load of code to find an error. So it's really interesting, I think, at the moment.
I think so, and I think there's a lot of hype around how dangerous and difficult it was, and I think that for me mostly seems to live in the governance area, which we've talked about before. This kind of evolving discussion is almost weekly. Well, perhaps because we're talking about it weekly, but it is definitely out there that each week that passes, you seem to have a slightly different take on it. My feeling is like it's people sort of getting used to, well, what can it do? Where are the dangers? What are the opportunities? The sort of thing we do with all these new things is you kind of humans, rather like in the film, 2001: A Space Odyssey, where the chimpanzees are picking up the rock and stuff, and looking at them and examining them and working out.
Oh, I've lost you, Ben. Have we lost Ben? It wouldn't be the first for the show, would it? If we have, I will. Let me see if I can re-establish Ben's link. Are you there, Ben? Aha, you're back.
You're back. I'm back. I was there all the time. You weren't. It's when I mentioned 2001: A Space Odyssey that you disappeared.
Well, don't mention it again then. There we go. Well, let's see how things progress. Can you hear me?
I can hear you, yes. Perfectly well.
It's excellent. In that case, before the robots close us down, let's move on. So next week is Bieber, isn't it, Ben? And I think you're taking part.
Oh,
you are taking part.
I am. Luckily, I know about it. And I have been briefed. Yes, I am doing it. I mean, Bieber is a huge event now for anybody who's not been to it. I'm sure lots of people have. It is one of the biggest insurance conferences in the world. Actually, it'd have about 8,000 plus people there. Huge exhibition hall and great big, main sessions, and then mine, which is called a seminar session. I think. I mean, we've got 700 people signed up for this, so. You know me, the shrinking varlet I am. I'm 700. That's like, I'm quite excited. Guess what?
Yeah.
So it's a big do. It's a big do. I've had a very interesting week actually talking to some of the people in this panel. Now some of these are really very senior people. So you see there Neil Galjard from Markel's MD, Adam Winslow's the GIE CEO at Aviva, Lee Cheeseborough, who's at Movi. There's big, and Paul Dixon, who runs big, who's on one of the advisory boards at Bieber. So all these people are kind of very senior and long-standing in the industry. And this is an interesting panel where we're talking about research into service from insurers to brokers, which is generally not very good at the moment and has all sorts of things which everybody accepts is a problem. but this is about what do we do about it. So it's quite a sensitive issue in some ways because it's between brokers and insurers to some extent, but it's also about the changing requirement, particularly through Consumer Duty, to give a better customer experience and look after the customer's interests. And I have to say, I think that while the discussion has sensitive areas, and you've got to be careful not to throw rocks, and of course we don't with the research. The research is very helpful because it just does lay out the territory, and then we can have this less sort of heated discussion about what can we do about it. And the panel is going to talk about this, but it'll just be the beginning of the conversation. I think one of the interesting things, just by example, has come out of this this isn't just about service; it's about the future of the industry and the proposition, and it's much bigger when I think people sort of think, oh, well, service is just answering phones, and that's one of the things we've moved away from a bit. We said it is about that, but if that's not happening, it's symptomatic of something else that's not really working so well. And that of course, we've got some very big institutions, in the market, particularly the three big composites, they've got great power and brokers need to work with them. So what do you do about that? But equally, the threat, if service isn't good, is that business will go to other types of structure, other types of insurance structure, like MGAs and so on. So it's been a really good start to the discussion, I think, around you can't just sit here and not have good service. It's not really an option. You've got to have good service, and you've got to keep on working out ways to do it. And I think you've got to collaborate. So it's going to be a really interesting debate, and I'm going to report back on it in our show, aren't I? We hope.
Yes, indeed. And
if I don't get swallowed up and beaten to death by people for whatever I say about the research.
The 700 of them with pitchforks and whatever else.
Well, they would, yeah, but I think the brokers probably don't mind my message, which is their message. But yes, there might be some. But actually, it's not necessarily that negative. We've actually said that there are things that don't need. While people are frustrated, the shift itself is not that huge to good service or to much better service, and I think it's the big players that could do that, and they would get competitive advantage.
Yeah.
So it's very interesting.
And that's what's in the report, is that right?
Yeah. So this is the summary. It's not all the detail of all the insurers, but
right.
We've produced this report, which will come out next week. It'll be launched next week. So if you go to the Insure Index website, you can get it. There'll be lots of opportunities to get hold of this. It's the summary results. Looks at things like e-trading, looks at the overall scores for the industry. It's got commentary from various people, some of the insurers and BIBA, and it's got some stuff on individual people and teams that are good. So it's a jolly good read, I would say, and everybody should get hold of it and sign up for it.
Excellent. Yeah. So as you say, we'll be reporting back, testing the mood of the conference next week and the following week, I think, once you've... And
I should have said, actually, that this, I think we were talking about this before, it's an important piece generally, because I think what we're seeing in the data is that there is much more now of a joined up kind of continuum between the UK regional market and London. And I think London feels like a bit of a bubble now when I talk to London people, whereas the regional feels like it's got all sorts of opportunities, and there are players who are saying one of our big strategic plays is going to be that UK regional market. And for tech businesses too, they're saying the same thing. So it's very interesting, and I think people are starting to come round to it. So it might be we are already seeing some of that structural change, and it has questions then for what London looks like in the future, I think.
Yeah, definitely. Look forward to hearing back on that conference and your panel, Ben. So that's good stuff. So another piece of news that you have brought along. So this is a clamp down on high insurance costs for leaseholder flats. So this is something we had a special on, 18 months ago, maybe even longer, around, it was around the crisis with after the cladding of fire at Grenfell. and what was happening to leaseholders. And this is a subsequent story, I think.
Yeah, so basically the government has been, particularly Michael Gove, has been on the, I was going to say the warpath, but the on this case about obviously what originally was the Grenfell Tower cladding issue, and then it's led into all sorts of different areas in the world of how leasehold works and how it's going to be sorted out, because obviously there were the cladding problems, but then there were all sorts of issues raised by the government about the developers and so on and so forth. And I think the view has been, unsurprisingly, that the leaseholders get a pretty rough end of the stick, as it were. And this is the latest one, and I think it is quite interesting, not just because of the leasehold issue, but it is about government and FCA doing quite a thorough report here into the whole way that commissions work when brokers work with the actual property agents. And traditionally, I think that, and still, the industry works on the basis that the agents help the brokers with information and setting up the proposition for a building, for example, for those insurance policies, and then there is a sharing of the commission between them, usually half and half. But actually, what's come through is that the government and the FCA is saying that there has been, those commissions have been too high, and therefore that's unjustifiable, and also that it's not transparent and so on, because obviously it could be seen that there's a conflict in there between the money that passes between the broker and the agent, which the leaseholder never sees. And I think the broking associations, including BIBA, have made strong, have kind of strongly resisted in lots of ways, saying that most of the time, if not all, this is actually a good arrangement that worked for many years, and it's just recognizing the work that agents have to do that's unpaid. But nonetheless, it is an area of somewhat of lack of transparency, and I suspect there probably are quite a lot of these in insurance. And once the government gets onto this, it might be that it kind of spreads further as an issue. So it's one to watch for sure. I think. Clearly it's quite a big part of the market, because there are a lot of leaseholder flats and things. And I suspect lots of arrangements where these shared commissions happen are problematic potentially in a world of consumer duty.
Yeah, and that then follows on to this other story where we've got sort of one claim being made, and again, kind of fees being questioned or commissions being questioned there.
Yeah, again, this is an FT investigation, I think, and it's to do with something you spoke about, is whether you could get cover for conferences and things, which I think you said was way too expensive. And anyway, these, through the middle of BI, these policies were put together, admittedly quite quickly, I think, to allow events to go ahead so they could get cover. So to be fair here, there are two aspects to this. One is to pay for a policy to get the cover, so that you can so your event can go ahead where you have to have cover, where it's a legal requirement. And the other is, well, did it pay out at all? So I guess in one sense, insurance may not pay out, but it may provide the security that's required in case. But what the FT is saying is there's perhaps rightly, there's quite a large gap between £180,000 of payout and the premiums of 6 million. So even if you took into account the cost of the insurer, versus the premium, I think your return on the underwriting premium would be quite high.
Yeah, indeed.
Certainly not around the 90%, 80% that we might see in decent markets. It might be much better than that. So to be fair, again, and we're always fair to the insurance industry because we love them. They put this. The LMA says this. They put a lot of work into it, put it together quickly to make sure that at a difficult time they could get things to work. So, you know, it's not necessarily surprising, but again, it's another of these transparency sort of issues.
Yeah.
You've got to be you've got to be clear, and you've got to show more value, if you like, for the product, which again, back to consumer duty, really.
Yeah, indeed. And also the story that you led with last week, which was, you know, the focus on cracking down on fraud. If you know, all the things are connected, aren't they? About the image or the brand almost of the sector, that you just need to be careful around some of this.
It's a shame that, yeah, I think it's a problem in an industry when you have government intervention to say that your product is not delivering value for its customer. I mean, I don't think that happens in the kind of FMCG area very often over tomato ketchup or toothpaste or whatever. You know, that of course it doesn't, but it that's because they very carefully market their products and prove the value and explain it. You know, and I think insurance industry seems to be getting quite a lot of these investigations at the moment and a lot of these criticisms. It doesn't look good for the industry. I think it's going to be about one very large part of consumer duty, which is communicating very clearly, and not in that awful regulatory tick box way, but really communicating clearly what this product is, what it does, and then the regulator then wouldn't have a say if the customer said, I understood exactly what I was buying and why I was buying it, and it helped me to run the show or a conference, and I was happy to pay for it. Right. I mean, I think you raised it. I mean, I pulled it out because you raised it. You said, well, it was something that could have helped us, but it wasn't worth having.
Yeah, because I think it was very expensive. And now that we have taken that cover, I think next year they'll probably put the clauses in, which means it doesn't cover us for stuff like strikes, which is kind of was actually a worse kind of risk for us, because they're really out of the blue and you've done everything anyway. So it's understanding the markets that you're trying to cater for, and then trying to price accordingly. Yeah,
it is, and I think it's also that it's got to be transparent, hasn't it? Because otherwise people think you intended deliberately maybe to rip them off when that may not be the case at all.
Yeah.
So I think you've got to be clear. I mean, it's hard, but you've got to do it. You know.
Yeah, definitely. Okay, good. So let us move on to part 2 of our interview with Jeff Ward. If you've not watched the first episode, first part, it's on our YouTube stream, our channel, so you can go and have a look at there. But this is the we pick up the interview here, and Ben, you're giving some examples of where the insurance has kind of fallen down, and we're talking about data. So let's watch the clip, and then we'll come back.
And similarly with I've heard another couple of examples of, you know, clauses being removed now from policies without any communication at all, because it's done under the guise of a system change. But it's something like, you know, for example, one I heard was that the policy would be invalid if you hadn't put an alarm on your house or your shed or something, and it was like such a major point, you know, that so in a way it's kind of that hiding behind the system, and you know bureaucracies will do that if they get the chance sometimes.
Yes, interesting change in I suppose it's sort of change in perception, really. I think we've all been brought up to think that modernization and bringing in technology is always a good thing for everybody, but it quite clearly isn't in that situation. And I think there are plenty of examples where, going back to the point I was trying to make, was we have some business that comes through London that's time critical, and big numbers are involved without question of doubt. You know, if you've got a fairly large risk that needs to be placed or renewed or whatever, you do get occasions when a broker's running around in the market at 4 p.m. on a Friday trying to get some ink on it. It's not just an apocryphal story. These things do happen. And at the moment, and I can perfectly sympathise with practitioners who, you know, who are looking at doing this electronically and thinking, well, there might come a time when actually I'm not going to be able to get that darn thing to go through because it will keep flashing up a red error message saying that this code is not valid or something trivial. So now what do I do? And whilst we've got a physical market, it's quite easy. You stick it on a printer, you stick it in a yellow in a leather slipcase and race around the market and get some ink on it. But so I think we've got a number of issues like this that are going to need to be addressed, and all of these things really, just to me, are just standing in the way of this aspiration to be a digital market. And everybody used to say that, oh, you know, why can't insurance do it? You know, banks have done it years ago. And, you know, that was always the nonsense that we heard from every market except for the large commercial insurance market. But of course, they failed to realise that the situation in banking or in stock trading or foreign exchange trading, so much simpler. You can take the most complex financial instrument in the world in a bank, and it's actually just a series of debits and credits. And the debits and credits themselves contain, I don't know, half a dozen data elements of any material importance: value dates, counterparties, few account numbers, and that's it. Job done. And this is orders of magnitude more complicated and really can't be trivialized.
I guess in that as well, the argument of some underwriters and brokers is that you can't really stick this stuff into a computer, some of it, and it's actually much better worked out as a deal between two knowledgeable people. So my view has always been that a lot of the knowledge, the assets of these businesses actually does not necessarily and never will sit in the computer itself. It will sit in the heads of the people who you've hired, and they are carrying this kind of implicit knowledge of things. And you know, for example, the concept of reciprocity, which just does not work in a regulated world, but it's basically, you know, the broker know you scratch my back and I'll scratch yours. But through that, when you talk about incentives, you know, the incentive is to get it right, to find the good business, to find the bad business, and know what it is because you've had a chat with the factory owner or the business owner, and you know some of the skeletons in the cupboard. No, that's never going to appear on a computer, is it?
No, it probably won't. No, you're quite right, and there's another aspect to that. Obviously, is that in order to provide all the information that we want, as you say, it may be wholly and utterly inappropriate to provide that information, but B, it might be just too costly to provide it. There has to come a point where somebody is going to say, well, actually, you know, we're into the the nth degree of granularity here, and we simply can't get any more value out of this, but it's going to cost more and more to provide it. Which I think, you know,
and sometimes, and I think it's also seen as inappropriate or even unethical for those businesses. I think the chair of AIRMIC said that at one of your conferences, Jeremy, didn't she? She said that the amount of information that is now being required to be asked for and then is not necessarily sent through secure channels, for example, companies are saying, well, we're simply not going to do that because this is, this is sensitive financial information that I'm afraid we can't just give out to third parties like that, even if you are our insurer.
Yes. No, absolutely. So I think, if we put feet back on ground, the data set that we receive from our customers at the moment, either by means of Bordeaux or schedules of values or slips and so on and so forth, if you set that as the baseline and said that our mission in life should be to receive all of that electronically using a predictable standard in a predictable way so that the data can be validated, and so on and so forth. If we had that as the mission, that's probably a big enough mission in its own right that's going to take quite a while to get through.
Yeah.
Without anybody's pitching in and saying, oh, well, now we've got this lovely stuff, why don't we ask for 10 times more? Which would not necessarily go down too well for the reasons that we've already discussed. So yes, and I think the other thing is, I suppose, it's always slightly bothered me is what does better underwriting mean? Better underwriting for whom? Does all of this granular data that some people aspire to, does it actually yield better underwriting? Well, maybe it does, but better for the underwriter or better for the consumer, or the insured? It does being able to underwrite using really complex technology, using vast amounts of granular data that would simply not have been available 10 years ago. Does that lead to a better result for the insured? I think that's to me, that's an interesting question. I have no idea what the answer is. And obviously some days it's going to be great and some days it's going to be not great. But
I think there is I kind of take a view on that, which is that ultimately the success of any industry is in serving, in the best interest of the customer. And I think that is even now enshrined in the regulations. So I think in the best customer's interest ought to be the kind of North Star of the industry. And you could therefore say that I genuinely don't think that's necessarily a difficult thing to, unless you don't need a computer program to work out whether you're doing the right thing 99% of the time. I think I think that the problem comes potentially if you codify it, if you codify it in some way, which means that you can then cheat that system in some other, you can build in the bad behavior, as it were, which we all know about in financial services, which is to simply set the computer up to take an extra 10 quid as a fee somewhere, and it suddenly turns out to be hundreds of millions of dollars. Oh, we didn't really know.
Yes.
I mean, it's just
that would never happen around here, though.
Oh, good God, no. I mean, I've never, ever, could that have ever happened in the insurance industry? No. But I mean, but it is, I mean, that's the way kind of regulation is pushing at, I think. And it is, I certainly hear, I think, brokers have whoever's closer, which tends to be the broker, has a better sense of that. And I don't think it's just because they think they want to stitch the underwriter up and get the cheapest deal. I think often they do genuinely, most of them these days who I meet seem genuinely they want the renewal, right? And they don't want it messed up. So they want the customer's interest looked after. But anyway, that's a whole other issue. But it is important to build those in, isn't it? And not just kind of take data or technology in isolation of that. Otherwise, your point is well made, that you otherwise you kind of shed the responsibility of your duty of care, or whatever that is, I think.
Well, that's the sort of vision of hell of the future of electronic trading, isn't it? That you cede everything to the systems and you just stand back and watch, or not even bother to do that. I don't know. When did Skynet become self-aware?
Well, I'm laughing because I just remembered I recalled I do a lot of work in claims, and I recall someone a few years ago with the whole of her claims team there, like about 40 people, and I was about to do a presentation about service, and she said, so when this new technology comes in, how many fewer people will we need in this team? In fact, will we need any at all? I thought, my God, the insensitivity of it was astounding. But I have to politely say that I couldn't tell what the future would be, but probably there would still be people servicing claims.
Yes, although I mean, Lemonade did have I don't know, I haven't really looked at AI in claims for a while, but when it all sort of kicked off, say 7 years ago, they were, I can't remember what Lemonade called their bot. Was it called Jim? I think they called
it was
AI.
That's something like that, wasn't it?
Jim. And Jim proudly announced that they'd agreed the claim for a lost fur coat, and it took 3 seconds or something. And I was sat there cynically thinking, well, why the hell did it take so long?
I know.
But obviously there was a little bit of something, but the only way they could probably speed it up was not even bother assess it at all. But around about that time, my daughter had a car accident, and the car was completely written off. She walked away from it scot-free. Very quite a low speed crash, but cars are designed to fall apart, aren't they? It was brutally ruined by a curbstone, basically, and it was a total write-off. And I have to say, I mean, everybody said, well, claims service is appalling and this is going to be a really dreadful journey and all the rest of it. And it was absolutely brilliant. The primary motor insurer was just brilliant. 15-minute conversation with a really, really nice, thoughtful person at the other end. And then the gap insurer exactly the same. And within a few days, we had all the money that we could have ever asked for. And I remember thinking at the time, do I really want AI in this loop?
No, I mean, I agree with you. And I think that I've heard so many stories. I mean, I've said to people, I once had a claim myself while I was working with a team about 5 years ago, pre-COVID. And we'd had this discussion about why don't insurers take claim service more seriously? Not that they're bad necessarily, but just why don't they make it more of an opportunity? And I had this really good claim, rather like you, and it went through really, really well. And I felt quite thrilled by it because I just thought, not because I was getting the money, but just the whole thing worked well and it solved the problem, right? And I called up my head of research and I said, I'll tell you what, claims is an opportunity for sales because I just know how I feel right at this moment. Yeah. And I will remember that. And I'd say what that company should not do now is bugger that up by doing the next one badly or something else. And they should write to me for the testimonial or whatever they need. But
yes,
but that's not just to go back to the thought process around data and things. In a sense, you kind of need to make this much more holistic, don't you? And say, why are we here? And what's the purpose of this industry? And it's obviously, we all know, cliche to pay claims, but I think it's to sell the sizzle, not the sausage, as they say in advertising.
Yes, it's hard to disagree with that. But I mean, I do wonder. I mean, if that is ultimately the mission, is to pay claims and make some money along the way, which I think probably is what insurance is all about. If that is the mission, then we certainly are not paying enough attention to claims as a market. No. I would probably say that, and I don't think we ever have done. I mean, just the nightmare of the vast numbers of people involved in a claim, anything other than a fairly simple one. You've got somebody who has some horrible mishap in North America, and by the time we've started processing the claim here, because it's over the limits and it's outside this and it's outside that, there's lawyers and claim loss adjusters and goodness knows all these people exchanging documents and sort of who's got this document. Oh, well, it's with a lawyer there, and this terribly holds up the process. And I think, that's probably an area that we really should be looking at.
I would absolutely agree on that. I think that's where you can see as well that there is. Someone said at one of your conferences, Jeremy, actually, I think, said a new claims head who'd just been in a new Lloyd's business, actually, and I think she said that you don't actually need years and years of data on claims. You just need some quite recent data, because actually the years and years isn't all that important. What's really important, if you look into the cases, is what happened last year or 6 months ago, because that's so in some ways she was saying it was quite simple to understand claims data as long as you kind of just didn't do it through a computerized process, but you investigated it and you did the analytics in a thoughtful, interpretive way. And I thought that was a really interesting point, actually. And I would imagine that is the case, actually.
It may well be, but it might not be something that an actuary would agree with, because they can't draw those lovely curves and everything else unless they've got lots and lots of sort of lead up to it. But I don't know.
Well, the actuaries have got the mortality rate wrong, and then I agree. I wouldn't trust actuaries either. I'll say that on this show. They've got it wrong as many times as accountants and everybody else in the so-called. Nobody knows the future, as J.K. Galbraith said. So it is. I think I guess with data, you just got to be very, very careful, haven't you, with the interpretation as well as the. Yeah. I completely agree with you, by the way, on that basic data. Then, because you're on a complete non-starter without that basic data. You really have nothing at that point.
Yeah.
Back. Oh, I can't hear you.
Got to press that button. That's it. Welcome back. And it's really interesting when you listen back to it a second time, isn't it? and just pull out the salient points, especially around data. It's just a really interesting conversation that we had with Jeff around service and data and what it means for people. And I really like what you were saying about that kind of personal, visceral feeling that you get when something's sorted out. It is an opportunity. Yeah, it's good.
I think like we talk a lot on this show and elsewhere about balance really between humans and technology. I think you feel uncomfortable when the balance is a bit wrong and you're just talking about data on its own or tech on its own. But once you bring the human element into it, it's a different conversation, and that's what we're selling at the end of the day.
Yeah, it's good. So thanks very much, Jeff. So we'll have part 3, the final part of our conversation with Jeff, where we bring it directly into the London market and the modernisation initiatives taking place right now. So Ben, let's wrap things up. Anything planned for the long weekend?
Well, no, other than the obvious. I'm going down to the South Coast on Monday, ahead just before the Beaver Conference, which is actually in Manchester, but I'm going to the South Coast, see my dad, have a little breath of fresh sea air, and then it'll be conference halls all week. Great.
Looking forward to it. I think I'm on childcare duty because my wife's a police officer, so apparently there's something happening in London. Yeah.
So that's almost like an invite.
It is, yeah. Got to wear all the gloves and hats and all that kind of thing. So
brilliant.
Who knows where she'll be?
Should have sent her with a little video or something. Mic'd her up so we got the inside track.
The Burgess and Bolton
at the coronation.
At the coronation. Yeah. There we are. Very good.
Relative of. Yeah, be good.
Excellent. Right. Enjoy the weekend, everybody. We shall see you next week. And thanks very much. Bye.
Yeah. Next week from Beaver. Have a great weekend all. Bye.